Welcome in traders. Let's dissect today's price action. We are currently looking at ES and the time frame we are looking at is the 2000 tick chart. Now the only other supportive indicator I use is the 21 EMA, which is this purple line. And other than that, I solely rely on price action and trend lines to look for high probability setups. Now the first thing I like to do is I like to identify the pre-market high and low, and these play a crucial role as soon as the market opens because we could either turn into a range, kind of like what we're doing here, or we can break out of it and then turn into a new trending market cycle. Now, in this session, we are kind of having a bit of some bullish imbalance and we are within this range. As you can see, we're in between the resistance and the support. So in this type of market cycle, what we want to do is we can wait for the corrections to play out and we have to buy low or sell high. Now, right after the bell opened and at the market open, we had a strong leg down, right? So we have to adjust and draw the trend line according to the market cycle. So as you can see, we have a nice leg down. Um, it does look like a seamless leg. A lot of you might have drawn it a bit wider, but as you can see around this area here, we had some broad price action and a break. So we're going to count it as a break and a new low, right? Usually we wait for the price to come to the EMA, we wait for a correction to play out, and then that's when we look for our high probability setups. But over here, on its way down, we had some broad price action, which counts as a break and a new low. We ended up pushing a little lower, which is definitely normal and healthy because we are going to test this support that we had from a couple days ago. And if you looked for an additional or wider channel, nothing really fits. If you draw this, there's too much space. So this is an area of development where you want to wait, see if the market is either going to reverse, consolidate, or have a continuation. And as you can see, slowly but surely, we had a double bottom here and we ended up having a strong leg up. So what we're going to do is now we're going to focus on the new trending cycle. And as you can see, we have a nice clean leg up. This is different from this over here because with this leg down, we had some broad price action, kind of distorting a nice seamless leg. So we counted this as a break and a new low. But as you can see this is just a nice clean trend with a series of higher highs and higher lows. Price isn't being disrupted at all. It just seems like one clean leg. So we're going to draw this as one leg and we're looking to take a long position at the EMA as soon as the bearish correction plays out because you have to respect the short and bearish corrections. So over here, I'm waiting for the short and correction to play out. We had a break, we had a new low, and this is where I'm looking to take a long opportunity. But what we want to see is we want to see a push above the EMA, a strong reclaim, and a higher low. Now, unfortunately, we were just kind of hovering around the EMA. We haven't sliced through it yet and we're waiting for high probability setup. So in order to take one, we need to see a strong breakout, right, above the EMA. Now, let's say for instance, this higher low, which is a nice juicy green bar, if it ended up breaking above the EMA, or if the previous bar closed above EMA and this formed right after, this would have been an A1 textbook setup, but we were just hovering about around the EMA and it kind of was starting to act as a support. So when this happens, you want to wait for price to reclaim, push above EMA, and we finally had it here, right? But there was no entry. You know, we have 4 bars stacked. We haven't broke above the EMA. We finally did, and we had a break and a new high. So now we have to pause looking to go long because this trend played out, right? You can't take another long position when the uptrend just played out and there can be a stronger bearish decline, a stronger bearish correction. You have to wait for the new market cycle, right? Nothing's really established here. We don't really have a range. We just had one strong leg down, break, and now we had one leg up, followed by a break and a new high. So now we have to wait for the next market cycle. Now, we started forming a bit of a range. As you can see, prices in the middle of EMA, we're going sideways. So when this happens, what you want to do is you want to identify a key support and a key resistance and draw it out and wait to either short at the top or to go long at the bottom, right? So over here, I was just waiting. We're kind of at the support, which was in the middle of everything as well. This was the early support that we had, and now it's kind of just lingering in the middle. So this was an area where I really didn't want to take any trades. Even though we were trending higher and making a series of higher highs, there was no alternative uptrend, right? And even if you draw it like this, right, which you can, we have a break here and a new high. So this was an area where you just kind of need more information. It's okay to sit on your hands and just wait for a stronger move before you just take random trades, especially when the EMA is in the middle. This is a no trade zone. I really didn't like anything here. And if you did take anything, you're just kind of rushing and you're not waiting for high probability setups, right? So then we had a leg down, right? And this is interesting. We had a leg down followed by a bullish correction with another leg down. Now, this leg, as you can see, and we'll make it a different color, brighter color, this leg is a lot shorter than this one, right? So you can't count this leg as a break and a new leg for this one, right? It's not a part of it. This leg is almost double its size, so this is its own new channel. So you can just forget about this and focus on the new stronger leg, right? Because this is what matters the most. So now we're looking for a short position, right? We're waiting for the bullish correction to end at the EMA. And once it ends, we can look for a short position. But as you can see, price sliced through the EMA and we retrace this whole downtrend, right? If you get the Fibonacci and you measure it, we retraced well over the 60% mark. So now we're going to forget about looking to go short and we have to look at the new market cycle and what's really going on. And if you zoom out, right, there's not much really going on as far as like any established range. This is just strong pivots up and down. The market really isn't getting new extremes for the stronger corrections. So you just want to wait, let the corrections play out, and not take any intrusive trades, right? And for this uptrend, we already had a break and a new high, right? And same thing, we had a leg up, some broad price action, followed by another leg up. You can't draw an alternative wider channel. It just makes no sense. Space here, it doesn't look clean. So once I saw this, once again, I waited. And keep in mind, these key levels are very important. This was earlier support, which is now turning into a resistance, right? Earlier, when we had the resistance and the support, when I mentioned how important it is to draw it in the pre-market session, now it's acting as a resistance, right? We almost had, you can call this a failed breakout. We tried breaking out of it and we failed, right? So we can actually label this a failed breakout. And what happened right after? We had a very strong leg down, right? A nice seamless leg down. So once I saw this, same thing that we did here. We're going to look to take a short unless proven otherwise, right? Clean leg, no overshoot. So let me get rid of this, as well as this to clear things up, and as well as, pardon me, as well as this. So now we're looking to take a short position, right? But we have to wait for the bullish correction to play out. We had a leg up, break, and a new high for this small uptrend, right? Now, using the counting technique, counting from the recent low, we have a new low, first entry short, right? This is the first candle that triggered lower than the previous one. We had no other breaks before this one, right? No break here, no break here. This was the first entry short, right? That failed. Then we had a pullback, right? And it made a new high for this mini uptrend. This is the second entry short. Great setup. You can even look at it as, I would even say one, two, we can say a triple top, closed right below the EMA. The sellers were so strong we couldn't even push above EMA. This is a very strong signal that the bears are strong, they're in control. The bulls can't even push price above the EMA, and this is the first high probability setup of the day. I actually took this and it was for a significant scalp. About, if you held all the way, I usually go for 5 points, especially because ATR was super high today. This was about 7 points, which is more than enough. And keep in mind, ATR was very high. Usually on average, it's about 3 to 4 points. Today was about 7. So especially if you're new, it's okay to sim trade when ATR is super high. But let's go back to the lesson, right? So we ended up making the scalp, which is great. We didn't end up making a new low for this, but the great thing about being, price action traders and scalpers is as long as you wait for the bullish correction to play out, you drew your trend lines right, right? And you're anticipating for the market to have a stronger correction and to make a new extreme, 9 times out of 10, you're going to get the trade, make more than what you're looking for in that scalp, and get right out. And that's exactly what happened. I got into the trade, got out, and then we had a stronger correction, right? And then after we ended up pushing higher, right, we ended up turning into a range. So let's get rid of this and let's draw this range. Price started going sideways once again. Whenever you see price in the middle of EMA, right, no strong legs like this one, this is a very distinct strong leg away from everything, no overlapping candles. But once you see this, draw the range and either wait for a breakout, right, out of the range or a failed breakout from the bottom, right? And that's exactly what happened here. We finally broke out of the range and we had a nice bullish leg. Now, same thing here. Once I saw this leg up, I was looking for a long position, but we just had a very strong correction, right? And look how strong this correction is. If we use the Fibonacci tool, once again, we retrace the whole move about 60%, right? So once I saw this, and the Fibonacci is a great tool, easy to use. Once you see a 60% retracement of the uptrend, you can forget about it. You know, that's it. This is a very strong reversal. And if you zoom out, right, what can we also see? We can also see now this is becoming more of a confirmed range, right? Reason being is price is in the middle of EMA, right? And it's like a ping pong game. I always use that analysis. We're touching support, touching resistance. Going back to the support, touching the resistance. So now we are finally in a confirmed range. And it makes it a lot easier because now we know where price will pivot. We know where to go short and where to go long, right? You buy low and you sell high, right? So we're in a range. And as you can see here, the same thing we had here, we had a failed breakout. We went up, touched the resistance, failed, and now we're reversing, right? Which makes sense because remember earlier I said, oh, we had an uptrend and I was looking to take a long. You start thinking, well, why did it fail? We had a very strong uptrend because there's a bigger story going on. We are in a range, right? And once we touch that resistance and we fail, this is a sign that a strong reversal is going to occur and we can anticipate for price to reach the bottom of the support, the next key level, right? So we're going to get rid of this uptrend, right? And once I saw this, now I'm adapting. Now what am I expecting? I'm expecting prices to reach the support, right? And especially because this uptrend didn't make a new high, you want to look for a reversal pattern. A lower high isn't enough, right? We had a lower high right here, but it's not enough. We need a reversal pattern just to confirm that this is 100% reversing. The bulls aren't going to attempt to make a new high for this uptrend, right? So counting from this new high, right, from this high pivot, we have a new high, first attempt to go long, that failed, right? You look for the trigger that triggered higher than the previous candle, that failed. And this is it right here. This is the first failed entry, long, right? First attempt for bulls to reverse the market and they failed. We ended up pulling back, and this is the failed second entry long right here, right? Same thing here. Let's zoom in. We had an attempt to make a new high and it failed, right? And this is also, right, if you count from the recent low, we have a new low, first entry short, pullback, second entry short. This candle triggered lower, pullback, second entry short, and on top of that, we have a double top. Rejection here, rejection here. So we have three confirmations that the market is reversing. We reached the top of the resistance, failed breakout, pushed below EMA, right? We have a reversal pattern, plus we have a second entry short, and as I said earlier, or just recently, we have a double top. So this is, when you have more than one, I always say if you have up to three confirmations, take that trade. Don't get scared, don't hesitate because you have so many confirmations that the market is going to reverse, and the more the better. So, and as you can see, market reversed, and this was a very significant scalp, about 12 points, more than enough. So we had a new low here, and although we had a new low, especially in ranges, price will most likely test the support or the opposite key level. So because we touched the resistance, we're anticipating price to reach the support. So what happened here? We ended up having a spike in a channel pattern as I drew here. But as I drew it, price started going sideways, overlapping candles. You couldn't even count a second entry short from here. So once I saw this, we're just going to count it as a break and a new low. There was no second entries here because if you look for a second entry, we only have first entries. We have a new low, first entry short, no pullback above the previous candle for a second entry short, started going lower, and then we completely went sideways and we had a break and a new low. So now what do we expect? Well, we're in a range, remember? So now we expect price to reach the top of that resistance, right? Because we had a break, this channel played out, we had a new low, and according to price action rules and range rules, once we have an extreme and we reach the key level and we fail, we expect a fail breakout, which we had here, and we expect price to reach the opposite key level, which it did later on, but around this time, it was about 20 minutes to close, which I don't recommend trading, and the trading day is over. So we had some decent high probability setups today. You just had to be a bit patient. We had the second entry short, which was a great clean setup, textbook setup. This downtrend needed a new low. We had a break, made a new high for the small uptrend, correction played out, and a very beautiful second entry short. Even for beginners, this was easy to spot, just alone that EMA is constantly rejecting that price. And secondly was this um almost four confirmations, right? We had second entry short, we had a reversal pattern. We also expect price to reach the bottom of the range as well as a double top. You know, it the candle was a bit far from the EMA, like from the body, but just alone, all this context matters. This was an easy setup. Um, and one thing I did want to add, price has been a bit volatile the past couple days, especially with a lot of data that's been coming out, as well as like a lot of political news that's going on. So these catalysts usually do cause a spike in volatility. So like today, for instance, the ATR was about 6 points, which is very high. So if you're new to trading, I wouldn't recommend trading it. I would just sim trade, because the losses can be, very substantial and big, and it can set you back, especially if you've been trading about 2 or 3 points the whole week, and one losing trade, right, with a 6 point ATR, you wipe out everything. So if from the beginning of the week you've been trading, your win to lose 2 to 3 points, don't jump 6 points double because statistically, and it just makes no sense because you're just wiping out all your profits just from one loss. It's not worth it. So I recommend sim trading. It's been a bit, volatile with these price swings up and down, which is okay. The more you do this and the more experience you get, you start understanding price action and knowing where to take trades and where to avoid taking trades. And excuse my voice, guys. I definitely sound a little raspy. I had a cold, but I'm definitely getting better slowly but surely. And I'll see you guys in the next video. Take care.